Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So Bill Ackman, one of the world's most famous and successful investors, has just raised $4 billion in the biggest SPAC in history. So I want to get into some of the details, firstly explain what a SPAC even is, and then get into some of the things you should be thinking about before making a potential investment into Bill Ackman's SPAC, Pershing Square Tontine Holdings. So let's get into the details, and I hope you enjoy the video. So a SPAC, or a special purpose acquisition company, is basically when someone goes public, an investor goes out and raises money and basically tries to get together a giant blank check. And in this case, the blank check for Pershing Square Tontine Holdings happens to be $4 billion, which is the largest SPAC in history. And the way that SPACs usually work is essentially money is pulled together so that the investor leading the SPAC can then go out and make an investment in another company, typically a private company. And basically they give themselves a set time frame to do that, generally something like 2 years. If they can make an investment in a company, then people that own shares in the SPAC will now be investors in the company that SPAC has acquired. And if they can't find something to do in two years or 3 years or however long the time frame is, the cash will basically be returned to the shareholders of that SPAC. They'll wind it up and they'll just return the cash. So that's the way that a SPAC typically works. In the past, they have had a bit of a bad rap. So there have been many SPACs over the last few years as they've sort of increased in popularity that have basically been giant compensation scams. They have been set up in a way where the lead investor who's going out and trying to acquire a business through the SPAC is getting just ridiculous compensation. You're paying huge percentages of the cash that's raised out to the individuals and the promoters and so on, whether it's through pure cash compensation or whether it's through options that allow you to buy shares at substantially lower than market prices, or all these combination of things that have really allowed SPACs to get quite a bad rap. And that's where this particular SPAC is quite different. So Bill Ackman and the promoters in this particular company have basically, they're basically taking no compensation. So that really reduces a lot of the frictional costs for investors looking to give their money to a really famous, really good investor in quite an efficient and low cost way. Now, for those who may have been living under a rock and don't know who Bill Ackman is, basically Bill Ackman is a value investor. He is also an activist investor, and that's probably what he's more well known for. Essentially, he buys stakes in very high quality companies, typically, that produce a lot of cash flow. They have leading positions in whatever market they operate in, and he holds them over the long term. And he's very Warren Buffett-like in the fact that he holds quite a small number of businesses typically. If you look at his portfolio at the moment, which I'll put up on the screen here, he generally owns somewhere between 8 and 10 companies and is fairly concentrated. He's not like your standard mutual fund, which owns 50 or 100 stocks and is basically just an index. He's definitely diving very, very deep on individual businesses and putting a lot of his money to work in each company that he invests in. Now, one of the things Bill Ackman does that is a little bit different is, firstly, he also shorts companies, and he's had some very public sort of failed shorts, with the Herbalife one being the big one, which there was even a Netflix documentary about. So he's definitely had his fair share of mistakes, but over the long term, and particularly over the last year or two even, he's had very, very good returns through using this particular strategy. But he does short the odd company, and what he's most well known for is really being an activist investor. So one of the things Bill Ackman will often do is they will identify a company that when run well is a very cash flow generative, market leader, big moat kind of Warren Buffett style business. But for whatever reason, they are either being run poorly or there's something going on that means that the company is trading at a discount to what it should be worth if run well. And Bill Ackman will basically acquire enough of a stake in that business to oftentimes get a seat on the board. Maybe it's even just writing a letter to management to, suggest things that he would change, to put it nicely. And he often goes in and tries to get the business to fundamentally change some of the core things that it's doing, and get the business to run much more smoothly, much more profitably, and just be better for shareholders in general. So that's something he's become very, very famous for. He even still holds companies for the long term. So once he has got them up and cranking, often they'll still be in his portfolio for a number of years. So that is Bill Ackman, and that is kind of his core strategy. And interestingly, this is actually not his first SPAC. So Bill Ackman is a very, very large investor in a company called Restaurant Brands. And one of the core holdings in the Restaurant Brands portfolio is Burger King, and Bill Ackman was very intimately involved in actually taking Burger King public again through a SPAC and kind of incorporating it into the Restaurant Brands business. So this isn't his first rodeo, and this is one of the reasons, mixed in with the lack of compensation in this particular deal, that he's been able to manage to attract a lot of money. One of the other things he's doing in this particular deal is he's gone out and said that Pershing Square, which is his regular investment vehicle, will also put an additional $1 to $3 billion into this SPAC at the time that a deal is announced. And that basically gives Bill Ackman purchasing power of up to $7 billion to acquire what he's calling a mature unicorn. And no, a mature unicorn is not what you find on the dark corners of the internet. A mature unicorn is basically, I guess firstly what a unicorn is basically one of these businesses that gets funded in private equity. They turn out to be the next Uber or the next Airbnb or whatever it is. He's looking for a mature version of one of those companies. So he's not necessarily looking for a company that is in the very, very early stages of its development. It may still be fairly early on, but what he really wants to buy is a company that is very profitable, that's again a market leader in its particular kind of niche that it operates in, and it's something that with a fairly high degree of certainty he can predict the cash flows of that business out into the future. It allows him to pay an appropriate price, and it's very much a similar philosophy to what I'm often talking about on the channel. So those are some of the things he's looking for, and he's really got a couple of key advantages with this particular SPAC setup. So this is the biggest SPAC in history, and one of the issues often when you're buying private businesses, particularly right now, is there are a million private equity firms over in the States at the moment, and it's forced private business prices to get unusually high. Now, frankly, that is really just due to the allure of private equity, making investors funnel a lot of money into that particular space, and it really creates these bidding wars where several different private equity firms are looking to acquire these unicorns or these, early stage high-tech startups and all that sort of thing. And it creates a lot of competition in the space. But one of the cool things with this particular SPAC is that the sheer scale and sheer size of the investment vehicle that Bill Ackman's put together is, I think he is probably likely to get away from a lot of those bidding wars. There are not a lot of private equity firms running around with $5 to $10 billion to put together towards a particular business. So I think the opportunity set is somewhat large, and the actual pool of buyers is a little bit smaller than you might be looking at if this was a $100 million acquisition, for example. Now, Ackman himself has come out and said that he thinks there is a pool of probably around 150 companies that are potential acquisition targets, and that's basically the hunting ground that he is looking at. There may be more that he's not aware of, but 150 is around ballpark the number of companies that are in that private equity space at that sort of valuation that he could potentially invest in. Now, one of the questions that often comes out of this sort of discussion is, why would a private company sell their business to a SPAC rather than just IPOing and selling it to the public themselves? And that comes down to basically two things. So firstly, regulation, and secondly, the ease of getting a deal done. So when you IPO a company, the rules over the past few years have become much more stringent. It can really just get your company turned inside out in terms of regulators digging into your business, and it can really distract from the operations of the company and just keeping your business on track and growing it as you intend to do. So the advantage of going to a SPAC rather than a traditional IPO is basically Bill Ackman and the SPAC handles all of the SEC regulatory type stuff. And the first news announcement that you will ever hear out of this deal is that the deal is done and everything's good to go. You won't have this long runway where a company wants to go public, they have to spend all this money, go through all this, all these processes, and then maybe 6 months or a year later, if everything's gone well, then they get a chance to IPO, and all that sort of thing. They can negotiate a price in private, they can have much less regulatory pressure, and it allows them to just focus on still running their business while this whole deal process is going on. So, in terms of the actual investment case, I mean, you can now go out and buy and sell shares in this Pershing Square Tontine Holdings SPAC. So let's talk a little bit about potential upside and potential downside. I mean, basically it is a very tricky one to give you an answer on right now, because it's basically all going to come down to one thing, which is what kind of deal can Bill Ackman get done? If Ackman can find a company that meets all of his criteria and he can get it at a reasonable price, those criteria being things like dominant market position, free cash flow generative, simple, predictable, great management, all these sorts of things. If he can find something that meets all of those criteria and get a deal done, I think we could have a very, very high quality public company coming out via the SPAC. Now, there are a couple of advantages to the way this is structured in terms of Bill Ackman basically being able to do a deal from anywhere from $4 to $7 billion because of the Pershing Square additional capital that can be put in at the time of a deal being announced. And the other thing going on is obviously, all the drama that's been going on around the world and health issues and so on. You know what I'm talking about. And that has probably put a lot of companies in quite a distressed situation. And you have the opportunity now for Bill Ackman and Pershing Square Tontine Holdings to come in and basically, as Bill Ackman put it, offer up to a $4 to $7 billion deleveraging event. So if you've had a business that, had very tight cash flows and so on leading into this, or even had very good cash flows leading into this, and then they've been hit really hard over a few months and have had to take on debt and have had short-term losses, but the business is still really high quality over the long term, you have the opportunity for Ackman to come in, basically erase a lot of that debt, capitalize the company much more effectively, and get them back on course essentially. So if he can pull off something like that, or if he can simply just buy a company that hasn't had those struggles at an attractive price, I think there is potentially a lot of upside given Ackman's track record. Now, the downside is, one, he doesn't get a deal done and the cash basically gets paid back to shareholders, and there's minimal downside to that. So basically, there's not a lot of money going towards compensation or anything like that. The downside would essentially be that you have your money just sitting stagnant for a year or 2 or 3 years until they pay that money back out and decide they can't find anything. The real downside risk would be if Ackman makes an investment error. So he invests in a business, and it just doesn't work out as he'd initially planned, basically. So, he looks at it on the surface, meets all his criteria, and then it turns out that it doesn't generate the cash flows he's expected, he's overpaid for it, they have some sort of large event that affects the business. That's basically the downside. So overall, it is a very interesting concept and certainly one that I'll be keeping an eye on. I expect that the stock will move very, very dramatically when a deal does get announced. That's not advice to make a short-term speculation or anything like that, but basically we've been told that the first announcement that will come out of this company is that a deal has been done, and then we're just going to have to wait and see how that business performs over the following year or 2 or 3 years, just to kind of see how it goes. So Very interesting concept. Specs have been getting more and more popular, and I like this one in particular because of the low compensation and basically the guy at the helm of it all as well. So I do hope you enjoyed the video. I'd also be very keen to get your thoughts on this whole thing as well. It's pretty interesting space and a little bit different to a company going through a traditional IPO. So keen to hear your thoughts. Drop them down in the comments below. But that is all from me today. So please hit like on the video if you did enjoy it. You can watch some older videos over there. Hit subscribe over there, and I will see you in the next one. Cheers.